Contractors lose their license over insurance paperwork. Contractors lose jobs because their coverage doesn't meet the GC's requirements. And contractors lose their entire business over one claim that blows past their limits. Most of the time, it's not because anyone was trying to cut corners, it's because the insurance wasn't set up from the start. I run an independent insurance agency. We write contractors insurance, general liability, workers' comp, commercial auto, tools and equipment, umbrella, all of it. And contractors are one of our biggest focuses because the coverage needs are real, the requirements are specific, and getting it wrong has consequences. So let's walk through what you actually need, what's required, and where most contractors leave themselves exposed without realizing it. Let's start with the one everybody knows about, general liability. In many states, you're required to carry general liability insurance just to hold a contractor license. The minimums vary by state and trade, but they're often somewhere in the range of $100,000 to a few $100,000. But here's what I want you to understand. The state minimum is the floor, not the ceiling. $100,000 in liability coverage sounds like a lot until you're a plumber who accidentally floods a finished basement in a $500,000 home, or you're an electrician and faulty wiring causes a fire, or you're a framing crew and someone gets hurt on your job site and the medical bills start stacking up. $100,000 can disappear in a single claim. Most of the contractors we work with carry at least $1 million per occurrence and $2 million aggregate. And honestly, in the markets we operate in, that's becoming the baseline, not the upgrade. And here's the practical reality. Most general contractors won't let you on a job site as a sub with anything less than $1 million. We'll come back to that. Next, workers' comp. In most states, if you have employees, even one, you are required to carry workers' compensation insurance. That's not optional, that's the law. And in construction specifically, these requirements are enforced more strictly than almost any other industry. Workers' comp covers medical expenses and lost wages if one of your employees gets hurt on the job. Construction is one of the highest risk industries for workplace injuries, so this isn't theoretical. Falls, equipment injuries, repetitive stress, it happens. If you don't have workers' comp and an employee gets injured, you're personally liable for their medical bills and lost wages. And you're also facing fines and potentially losing your license. It's one of the fastest ways to lose everything you've built. Now, if you're a sole proprietor with no employees, most states allow you to waive workers' comp coverage, but you usually can't just skip it. You typically have to file a formal waiver or exemption with your state's labor commission. Don't assume you're automatically exempt just because you work alone. The process varies by state, and if you don't file what's required, you can still get flagged. Here's something a lot of sole proprietors don't think about. If you don't have workers' comp and you get hurt on the job, there's no coverage. Your health insurance might cover the medical bills, but there's no lost income replacement. You're just out of work with no paycheck until you recover. Something to think about. Now let's talk about one that gets overlooked constantly, commercial auto. If you're driving a vehicle for work, hauling materials, pulling a trailer, driving between job sites, and that vehicle is owned by your business or used primarily for business purposes, your personal auto policy likely does not cover it. Most personal auto policies exclude vehicles used primarily for business or titled to a business entity. That means if you're in an accident while driving to a job site in your work truck and you only have personal auto insurance, your claim could be denied. And here's something a lot of contractors don't realize. Your general liability policy does not cover auto accidents. That's a separate exposure entirely. If you cause an accident on the road, that's an auto liability claim, and it has to be on a commercial auto policy. Commercial auto covers liability, collision, and comprehensive for vehicles used in your business. It also covers your employees if they're driving company vehicles. And if you're pulling a trailer, which Most contractors are at some point. Make sure your policy covers the trailer and its contents. A trailer full of materials or equipment rolling off the highway is not a claim you want to find out you're not covered for. This one is probably the most underinsured area for contractors, and the reason is simple. Most contractors insure the truck, but not what's inside: your tools and equipment, the stuff in your truck, your trailer, your job site, your shop. A standard general liability policy does not cover your tools and equipment. A standard commercial auto policy covers the vehicle, not what's inside. So if someone breaks into your truck overnight and steals $10,000 worth of tools, and that happens all the time, you may have no coverage at all unless you have an inland marine policy. Inland marine, also called tools and equipment coverage or a contractor's equipment floater, covers your tools, equipment, and materials whether they're in your truck, on a job site, in storage, or in transit. It covers theft, damage, and in some cases, mysterious disappearance. The cost is usually very reasonable relative to what you're protecting. If you've spent years building up your tool inventory and you don't have this coverage, you're one break-in away from replacing everything out of pocket. Let's talk about bonds briefly. Most states require a surety bond as part of contractor licensing. The amount depends on your state and your license classification. It can range anywhere from a few $1,000s up to $50,000 or much more. The bond isn't insurance for you. It's a guarantee to the public that if you fail to perform your contractual obligations or violate state regulations, there's money available for a claim. If a claim is made against your bond, you're responsible for repaying it. Most contractors handle this through their insurance agent when they first get licensed and then forget about it. Just make sure it stays current. If your bond lapses, your license can lapse with it. Now, umbrella coverage. A commercial umbrella policy sits on top of your general liability, your commercial auto liability, and your employer's liability, which is the liability portion of your workers' comp. It kicks in when the limits on those underlying policies are exhausted. For contractors, this is important because the claims that hurt the most are not the small ones. They're the catastrophic ones. A worker falls off a roof, a piece of equipment drops onto someone's car, or worse, onto someone. A fire you caused spreads to an adjacent property. These are the claims that blow through a $1 million general liability policy. An umbrella gives you an additional layer, typically $1 million or more. That can be the difference between surviving a major claim and closing your business. The cost of an umbrella relative to the coverage it provides is usually one of the best values in a contractor's insurance program. Now let me talk about something that affects your ability to actually get work. If you're a subcontractor, and most specialty contractors are, the general contractor you're working for is going to require a certificate of insurance before you set foot on a job site. This isn't a suggestion, it's a requirement, and the GC's requirements are almost always higher than whatever your state minimum is. A typical GC is going to require at least $1 million per occurrence and $2 million aggregate in general liability. Many require commercial auto coverage. Some require proof of workers' comp, even if you're a sole proprietor. And they'll often require that the GC is listed as an additional insured on your policy, meaning your insurance extends to cover them for claims arising from your work. If you can't produce a certificate that meets their requirements, you don't get the job. It's that simple. Contractors lose bids not just because their price was wrong, it also happens because they couldn't produce the right certificate in time. Your agent should be able to turn a certificate of insurance around quickly. If they can't, that's a problem. One more thing, and this is where it gets a little more advanced, but if you're working for larger general contractors or bidding on commercial projects, this matters. Beyond just having the right limits, a lot of general contractors are going to require specific endorsements on your policy. Waiver of subrogation. This means your insurance company agrees not to go after the general contractor to recover money they paid on a claim. GCs require this so your carrier doesn't turn around and sue them after paying out. Primary and non-contributory. This means your policy pays first before the general contractor's policy kicks in. Without this, the GC's carrier might argue both policies should share the cost, and that's not what they agreed to. Per project aggregate. Instead of having one aggregate limit that applies across all your jobs, this gives you a separate aggregate for each project. So a claim on one job doesn't eat into the limits available for your other jobs. If your policy doesn't include these endorsements, your certificate won't meet the contract requirements and you won't get on the job. Most contractors have never heard of these until a general contractor's risk manager kicks their certificate of insurance back. Now you know what to ask your agent before that happens. So let me give you the full picture of what a properly insured contractor looks like. General liability, at least $1 million per occurrence, $2 million aggregate. Workers' comp, required if you have any employees, waiver filed if you don't. Commercial auto, covering every used vehicle in the business, including trailers. Inland marine, covering your tools, equipment, and materials on and off the job site. Surety bond, current and meeting your state's licensing requirement. Commercial umbrella, at least $1 million sitting on top of everything else. That's the package. And when it's set up right, it's not as expensive as most contractors expect, especially when you bundle multiple coverages with the same carrier. If you're a contractor in Nevada, Utah, Arizona, or California, and you're not 100% confident your coverage would survive a major claim, let's fix that. We work with multiple carriers that specialize in contractors insurance, and we build programs that meet your state's licensing requirements, satisfy GC contract demands, and actually protect your business, not just check a box. There's a link in the description to get a quote or just give us a call. Check out our Google reviews to see what our clients have to say. And if you own rental property, a lot of contractors do, I made a video breaking down why property managers should require renters insurance from every tenant. Same idea, protecting your investment with the right coverage. That video is right here. Thanks for watching.